Why stock market investors need to fasten their seatbelts. I'm Bob Stokes with Elliott Wave International. Elliott Wave International's analysts have long noted that periods of low stock market volatility are almost always followed by periods of high volatility. Granted, periods of low volatility can stretch for a while, yet a change occurs sooner or later, and that shift is often dramatic. Here's a case in point from the Elliott Wave Theorist, which published on October 23, 2017. Persistent new highs in stock prices week after week, and recently day after day, have led to a substantial reduction in the volatility of stock prices, to the point that the CBOE Volatility Index has just reached an all-time low. The VIX futures contract is widely characterized as a bet on the future. That is, as a gauge of expected volatility. But futures contracts always reflect the present, never the future. And because financial markets are a fractal, present conditions never maintain. As you may know, a fractal is an object that is similarly shaped at different scales. At the time the chart published, large speculators were short a record number of VIX futures contracts. Yet it wasn't long before the inevitable change unfolded. Stock market volatility took a big jump in late January and early February of 2018, with the Dow surrendering 10% in less than 2 weeks. And 2018 also brought other periods of eyebrow-raising volatility. On December 7, 2018, Bloomberg reported that the S&P 500 had 1% daily trading swings 56 times up to that point in 2018. What does that have to do with the present? Well, our August 14th, 2020 U.S. short-term update notes, with the exception of 5 days in early June, the VIX has been declining since March 18th, when prices spiked to a high of 85.47. This 5-month decline culminated with a streak of 7 consecutive lower closes through August 10th. Currently, large speculators are net short nearly a third of all open interest in VIX futures. Of course, it's possible that the VIX slips to even lower lows before a jump in volatility unfolds. Yet you may want to get all of the insights that the U.S. short-term update is sharing with subscribers so you can prepare for what our analysts expect next. Take advantage of our 30-day risk-free trial, and then you may want to fasten your seatbelt.